Welcome everyone. I don't know if you guys were able to hear the thunder and rain that's coming down right now, but hopefully you guys are able to hear the rain. But I'll be turning. Oh, there it was. Yeah. So there's a huge thunderstorm going on in my area, so it's kind of nice to hear. But anyways, welcome everyone. Welcome to the weekend live stream here. I just wanted to do a little quick live stream here for everyone over the weekend since the feedback was so good the last time I did it. So hopefully more people join in the next few minutes so that we can start. I started a little bit early, so we'll wait for people to join in. All right. For now, I'll just leave some music and we'll begin. Okay, let's go ahead and start. Welcome, guys. I see more people joining. Welcome. So, I'm just gonna put the music down. I do like the rain myself, the sound of rain. So, if you guys hear the big booming sound of thunder, just know that it's coming from me, not anywhere else. I just put the music down. But yeah, so let's go ahead and start with the markets here. So, SPY ended up closing lower on Friday, and that's after on Thursday where we had a huge move upward, right? We had this huge historical reversal, and it's amazing what we did on Thursday because no one was expecting it, right? No one was expecting such a large move as we continue to basically take out all the shorts. So what happened on Thursday was that people were constantly shorting, right? So as people were continuously shorting, they had to get out of the positions because they were at a significant loss. And as they were closing their positions, more buyers started to come in as well because the price kept going up higher, and that aided in the fact that we're seeing a short squeeze, which is the reason why we kept on seeing higher highs and higher lows. Now, obviously, it makes sense in hindsight, right? When we're looking at it after the day is over, because hindsight is 2020 always, or hindsight is perfect, right? So, it's always good to make things logical, anyways. So it's better to know that that your hindsight is 2020, and using that knowledge, make sure you guys are always making things logical, right? Because if you don't, then you're gonna lose yourself in this market of uncertainty, right? We're always searching for certainty in a very uncertain environment. So that is the big thing about market psychology, right? So, obviously, on Friday, we did the same thing, except vice versa, right? Where it seems like more sellers start to come back in after a retest of this 370.50 level. And this is the level that we've been looking at since a couple weeks back, in the last week of September, I believe, here. And this is a clear level where we need to break above it, which we did in the first week of October when we started to reverse higher. And we were able to hold about 270.50 for a while until the market was spooked by Federal Reserve interest rate hikes, okay? And it got spooked by the potential of worsening CPI data, which we got, right? So here's the question now. Was Thursday's move the movement where it priced all of that in, right? Where now we're seeing the market saying, okay, since we've been going down so far from Federal Reserve's interest rate hikes and the future of Federal Reserve interest rate hikes and the worsening CPI data, or just really bad CPI data, to be simple, are we ready? Are we ready to finally pivot higher, right? Now, in my personal point of view, I am still a bit bearish, even though I am trying to play these bounces here, these reversals, because I want to catch them. Because when they do happen, we tend to get days like Thursday, and on the first week of October, we got that back-to-back movement to the upside, right? I believe on the first week of October, the first Tuesday of October, we had a very large movement to the upside after a nice gap up as well. So I believe we ended up on the day over 3%. That's huge for indexes, right? So it makes sense that we've been trying to pivot from a bottom and trying to find a bottom as the market is trying to figure out, trying to perceive what the future will do. And remember, the current price is moving on future perception on what could happen in the markets and the economy, right? The macros. So is the market reversal over, right? Is this truly, after failing to bounce multiple times, are we never going to see a market reversal, right? Like, is the market reversal just completely over, right? Are we not going to see a market reversal? Well, here's the thing, right? You can take this at a multi-phase view here, right? Multifaceted view, and you can look at it in a short-term perspective. You can look at it from a long-term perspective, and for both, you can look at it at a fundamental and technical perspective, and etc. Right? You can go on and on and on, right? And I think the major point that we need to know is that, well, the markets are still spooked. It's still spooked, right? Fundamentally and technically. So we will definitely have more bounces in the future because of a day that we had, like on Thursday. Thursday was a clear opportunity for buyers, right? I'm pretty sure there were multiple buyers that came in on Thursday, right? Long-term buyers who are trying to average down their SPY positions, or just simply adding more to the long-term SPY positions, right? I even mentioned it on Thursday to my CFO Discord members. So, when we have such big, large buying days like this, you have to pay attention, right? Because it's telling you that the layout, the environment is sort of changing, right? There is some sort of a major event that happened, like on Thursday, that has to make you think that something is about to change. So I don't personally think that we're never going to never not going to have a market reversal, right? But there's a lot of people who are bearish out there, and the market loves to lean on towards the majority, right? And also it loves to tend to screw the majority thinking as well. So it's one of those things that they get to kind of think about yourself because it's hard to figure that out, obviously, whether or not the market is going to go with the majority perspective or it's going to screw over the majority perspective by doing the opposite of what the majority is thinking. Now, so far, the bears have been very, very happy throughout this entire year so far. As you guys already know, we've made a high on January here, right? 474.49, right? And we're still a long ways off to 2020 lows of 210.25. This is one of the fastest drops and fastest recovery in history, right? The 2020 market crash and market recovery. And I don't think we're gonna have that velocity back down, right? As we saw in the months of, I would say, February to end of March. But we've been seeing a very gradual movement to the downside. Now, a lot of people are now regretting, saying, oh my God, maybe I should just shorted all different at the top, right? But again, hindsight is 2020. Sure, you could think like that, but remember, the only reason why you're looking at this and the reason why hindsight is always 2020 is that, well, you're just trying to make sense of what happened in order to better yourself for a future where you can actually take these opportunities at a better execution time, right? So with that being said, right, let's bring that back. For SPY here, I'm not saying the bottom is in, but there's a possibility that we can continue with that October seasonality that I've been talking about multiple times, right? And for the people who are just joining in right now, I've dropped some good, valuable information. So make sure you guys check out the recording around, I would say, maybe 7 minutes or so into the video here. So make sure you guys check out the recording if you guys are just coming in. But welcome, guys. Welcome. So SPY here, like I said, I'm not calling a bottom, right? The Thursday would have been a great day to have a bottom, right? Because Friday should have shown a nice continuation to the upside, but Thursday was just too big of a move, too large of a move, so that we had to digest the move entirely, right? So with that being said as well, let's take a look at the technical side now and focus on these two levels. Okay, so right now we have a pretty good level around 356 as support on the intraday time frame, right? And obviously I already talked about 370.50, but this is a very significant level, the near-term perspective, because if we're able to break out of this, then we should be able to have a nice movement to the upside, as we did on the first week of October, right? And we even retested 370.50 on the first Wednesday of October, right here. And we're trying to use that support, but ultimately we caved down to new lows here as sellers came back in due to the fear of interest rate hikes and CPI data, right? So, on the macro side, right, on the fundamental side, I honestly think that we just need to see the market perspective change and shift into a new way of thinking, and the fact that, hopefully the market can kind of think like, okay, well, we got bad CPI data again, but we've been generally downtrending. It's just that we've been oscillating back and forth in this 8% range here for the CPI data. So what we need to be looking at now is for more of an optimistic outlook in the fact that CPI data has been going down since the highs that we reached. I believe it was above 9%. So once we get below 7%, all right, or below at least 5%, right, that is my median point where I think the market will slowly start to literally truly believe that the Federal Reserve is doing what they can, and what they're doing is having an effect on the markets, right? So 5% is kind of my median kind of checkpoint that CPI needs to get, right, to arrive at that 5% data points. Hey Joe, what's up? What's up? Hope you're enjoying the weekend. Thank you very much. Hey Naeem, Spy God, what's up? What's up? So for all the people who are just joining in right now, to everyone who's coming in, welcome, welcome. Thank you for coming and thank you for joining. But remember, guys, make sure you guys watch the recording, okay? Because you guys have to remember that I do have really good pointers during my live streams. So make sure you guys go back to the recording and make sure you guys watch it. And if you guys have enjoyed it, leave a like down below, okay? Oh, wow. I didn't even notice the likes here. 4 likes. Thank you, guys. Thank you very much. Wow. Thank you. Let's see if we can get it to 10 likes here during the duration of the live stream. No, you said dark cloud cover pattern. Yeah. Yes. I know what that candlestick pattern is. Yes, I've seen that before. I personally don't use it, but I know what that is. But yeah, I see that. And that's the reason. That's another reason why. That's another technical reason why I guess you can add on to being more bearish again after a day like Thursday. But like I said, fundamentally, technically, no matter how you look at it, short term, long term, okay, we just need to figure out, where the market is going to think for the next few months and next few years. And that's right, next few years. Because like I said, the current market price action is going to move based on the future perception on where everything is at, right? The condition of the environment, the economy, and the condition of the overall market. So make sure you guys remember on Thursday, this is a significant day, right? Not just because it's a historical day, but because, like I said before, there were buyers. They were buyers, even with in the face of bad economic data and CPI data, right? So even with the Federal Reserve potentially looking for higher interest rates, like 1 whole percentage point, right? One whole basis point movement higher on interest rates, right? So, with the Federal Reserve doing what it needs to do, I need to look to see whether or not the market will accept what the Federal Reserve will do, right? Because right now the market is basically telling the Federal Reserve that it's not doing enough. So once the market is able to accept maybe around that 100 basis point or 1 whole percentage point interest rate hike, then we might be able to see a reversal. But like I said, the market reversal right now is not happening so far. So I wouldn't say the market reversal is over. We're just going to have these short-term, very short-lived market reversals to the upside as we continue to head lower on the longer perspective, right? Long-term perspective. So just make sure you guys remember Thursday was a significant day. There are buyers who are willing to buy up with the market, and for the fact that we're able to have a short squeeze price action after months, well, this entire year so far, of just continuous push lower, right? And continuous failure of every single reversal that we've been trying. So make sure you guys always remember that Thursday was a very, very important day from this point forward. All right. And the more we have days like this where we have more than 2% or even over 1% market days, right, in the overall daily time frame, take note of that, because that means the market is trying to gain some strength. All right. And it's one of the classic textbook ways to kind of figure out where or when a market bottom could be happening. So the market bottom can be happening in the next few months, right? It could be happening into next year when the recession officially starts. Who knows? All you want to look for is on the technical chart when we have such big volume days and such short squeeze type of action. All right? Okay, so with that in mind, I don't want to repeat myself over and over, but essentially what I'm saying is the same thing, right? But On the 15-minute time frame here, I kind of want to go over, especially Joel, what you just asked of me to do. Look for some potential trades on SPY. So SPY ended up pretty bearishly. We had this nice little inverted hammer candlestick, or just a really wide evening star doji candlestick, or just an evening star candlestick, right? And that usually means that we move lower. That's bad news, right, to the downside. Or we can just look at it from a perspective of these two upper shadows, or top wicks here, or upper wicks, and we can just use it as a very, very small double top, a mini double top, I would say it, right? And the reason why I call it mini is because, you know, it's in the 50-minute time frame, and we're looking at very, very short-lived candlesticks that form. So with this double top, that can also confirm a movement lower to the downside this new upcoming week. Now we have a very, very good support around 356, and that I already mentioned that on the daily time frame as well. So if we do find some support around 356 on the intraday time frame, or specifically 355.80, we can see a nice little bounce because, well, like I said, to my CFO Swing Watch members as well, we've been going sideways and then dropping lower, sideways and moving and dropping lower, right? That's a clear indication of all the buyers who are in here from Thursday who are selling, right? Or they're either averaging down and buying more to the long-term SPY positions, especially for the people who bought SPY on Thursday. And like I said already, SPY, there's still probably a lot of people who went in on Thursday for SPY, right? Either adding new positions, or they're averaging down on their already principal position on SPY. So those are the people who have been affecting the price action on Friday, right? So the initial move down on Friday was from people who were either trying to get redemption at the big move that we saw yesterday, on Thursday, and it was also a mix of people who were holding from Thursday and they're starting to sell at the market open on Friday. All right, that's what we had. That's what happened when we saw this movement lower, this impulsive move lower. So as we continue to see the sideways action and then move lower, sideways action, move lower, we might see some accumulation going on around 356, or specifically 355.80. So make sure you guys are on watch for that. All right, and there could potentially be a nice bounce entry around 356 for a nice scalp back to around 357.20. So that could be a very well be a good trade or good scalp on Monday. Okay. Hey Dion, what's up? Wow, thank you for 6 likes. We're almost there to 10 likes. Awesome. So that's basically what I'm looking for on SPY. A little tiny bounce at 356, and most likely we might continue lower. But if there is a chance that we see a big move higher after we bounce at 356, it will make sense because there was a lot of buyers that came in after we broke above 356. Okay, so remember that. Okay, remember this level on the 15-minute time frame, and don't forget it. Make sure you guys have it on your own charts as well for SPY. Does anyone have any questions? Hope everyone has been enjoying their lovely night. It's been a very thunderous and rainy night here. So if you guys check out the recording after this live stream is done, you guys are able to hear the downpour that I was having when the live stream started. But it looks like everything has calmed down. But if you guys enjoy the sound of rain, you guys will be able to hear it for a few minutes. Excuse me. I personally love the sound of rain, so that's the reason why I didn't have music, and that's also the reason why I actually turned off the music. But now it looks like I have to turn on the music. So the rain decided to stop. There we go. Hope it's not too loud, but let me kind of lower it again because my default settings are screwing me over as usual. Okay, so let me know if you guys cannot hear me. Okay, so seems like no one has any questions, so we Gucci? All right, we Gucci. We are good. All right, so clear this out. Oh, there we go. So with SPY here, that's essentially what I have. I mean, long-term perspective, I am still bearish because, like I said, the CPI data was bad. But I am hopeful for the future here because, like I said, Thursday is a major marker point on this downtrend. Okay, this is a very, very big move to the upside on one day after months of downtrend, right? And sure, you might say, wait a second, Andrew, there are bigger days where you got bigger volume, right? However, that's different from any of these days, right? Because these days are invalidated by the current move that we've been seeing, right? We've been moving to the downside. We've completely invalidated any type of gains that we saw on these big volume days to the upside. So as we continue forward, just make sure you guys remember that we might be seeing more short squeeze movements like this. This is the first one that we've seen so far since the market has been downtrending, right? So let me get a nice marker here. Okay, so what should I choose here? What should I choose? Okay, oh, that's too big. Okay, this is right here. This is the day. All right, so don't forget it, guys. Don't forget it. If it breaks 355.80, possibly we go lower. Yes, it is possible that we go lower. Yep, we'll hit 355, and then we might hit 353 again, and then we might even hit and retest 348.50, which we actually bounced off of on Thursday. And guess what? That was a level that I've drawn months ago, right? And the reason why I drew it was, well, that was the support level that we saw back in November of 2020 while we're making higher highs and higher lows and kind of making this micro flag here, okay, or this wedge, right? So there's a good chance that 348.50 might become our new line in the sand level, just because based on the fact that we've had such a historical day off lows here on Thursday. So make sure you guys watch that. All right. And my apologies, guys, if I'm all over the place. It's Saturday. I've been just chilling, chilling, reading things here, reading things there, taking some breaks, and it's been a nice Saturday. So, getting ready to consolidate all the information I have for the CFO Swing Watch newsletter that's gonna come out tomorrow night and stuff like that. So hopefully everyone has been having a great night so far, and obviously thank you guys so much for joining, taking the time out of your nightly routines and just joining me to hear me talk about the markets, right? And like I said, I'm not a special person. People always love to idolize some people and whatever thing that they're doing, and I really hate that, to be honest, because, well, we're all in we're in the same situation together, right? On whatever it is, right? At someone's job or some sort of a community or some sort of a group, right? Sure, there's a leader, but it's always a bad story and a bad ending whenever people start idolizing someone, right? So, don't think of me someone as special. I'm just human like you guys. We all make the same trading mistakes. We have the same human psychology. It's just I could tend to be a little bit better at knowing what my faults are, what my human psychology is, right? My own unique psychological mental state, or an emotional state as well, because everyone's unique. But like I said, everyone can improve, right? Every single trader, and believe me, can improve. Okay, so hopefully you guys find that message hopeful for anyone who's struggling right now in this current market environment. But remember, the market will always be here unless the world ends. So make sure you guys are always be hopeful. Never quit. Okay, quitting is for losers. And remember, you guys aren't losers. Just because you guys lost in the market does not mean that you guys are losers. We're all here to win, right? Dollar Bill, you said, thanks, man. Always appreciate the knowledge and gems you drop. Thank you. Thank you very much for even coming in on this lovely Saturday evening. And wow, thank you guys for 6 likes. Oh, did I already say that? I think I did. You see, I am all over the place today because I'm just chilling. I'm not too focused on anything. But yeah, guys, I think that's it for tonight. I just really wanted to go over what I think about SPY on the broader term and the longer term and short term, whatever it is, and just give you my thoughts on essentially, you know, where we can head. All right, we're not really in a trend on the short term, like I said. We're just going sideways so far right now, even on the 15-minute time frame. You guys seen that? Even on Friday, just on Friday, we saw that sideways action coming in, right? And even though we were going down, if we take a look at the daily time frame, we're right back down to the lows that we saw on September, right? So unless we break below 355 and 356, and we can head back down and hit the line in the sand level again of 348.50. Okay, that's it for tonight, guys. Hopefully you guys enjoyed this weekend live stream. If you guys show more good feedback on these live streams, I'll do way more and maybe consistently on Saturdays. But yeah, thank you all for joining. I'll see you all on another video. Have a good night.